Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a updated look at some of the major currency pairs versus the U.S. dollar. The dollar is getting stronger over the last few hours of trading, and it's changing the technical picture for some of these currency pairs. So let's get started. I'm going to start by taking a look at the euro versus U.S. dollar. And what we know is that the price fell back below the 38.2% retracement. That's of the April trading range. That level comes in at 1.0709. And the price fell below that level and increased that momentum to the downside, breaking below the 100-hour moving average. Recall from yesterday, the price held support against the 100-hour moving average. We also found support against the level here before moving to the upside. So the last two tests of the 100-hour moving average have found support, but that was broken in trading here today. Now setting that moving average as a risk level for traders looking for more downside in the euro, more buying in the U.S. dollar. However, having said that, the 200-hour moving average right here at 1.06715 remains another hurdle to get to and through. Then we have this trend line connecting most recent lows, and then we have the low of this swing area, which has a number of different swing lows and swing highs to this area. If we get below all those levels, that increases the bearish bias to the downside. We'll have traders looking toward our low prices from this week and last week, which took the price all the way down toward the 106 level. Back here on, I guess that's around March 14th or there, before the market started its rotation back to the upside. So, or that's April, of course. That is a progression, but certainly sellers are taking more control below the 1.0695 level. Stay below that level is more bearish. So let's take a look at the dollar versus yen, and this currency pair continues its run to the upside, trading to a new session high, high price near. Let's put it right here, near 157.43. This is the highest level going back to 1990. Are we on our way to 160 really quickly? Well, we'll see. But what we know is that the sellers have to show that they can win. If they can't show that they can win something from a technical perspective, they are not winning. And one way to do that is to go to the shortest of time frames that I look at, the 5-minute chart. And if you look at the 5-minute chart and focus here on the 100-bar moving average, yes, the price moved below the 100-bar moving average and the 200-bar moving average right through here. This is off the Bank of Japan interest rate decision, but we did find support buyers just below the 100-hour moving average right here, and the price quickly moved back to the upside, reestablished support against the 200-bar moving average, moved above the 100-bar moving average, and then the next time we had a corrective move, the price only made it to the 100-bar moving average, went a few pips below that level before snapping back higher again. And this low right here didn't get near that 100-bar moving average, so we continued to run to the upside, and we are continuing that surge right through here. So guess what? If the sellers are to take control, what do they have to do? In the minimum, they have to get below this moving average and stay below that moving average. I can't say this enough. You can't pick a top. You have to have the market tell you that the top is in place. And the only way you can do that is to go below something like the 100-bar moving average of 5-minute chart and stay below that level. Absent that, the sellers are not winning. The buyers are winning. So understand that 156.78 is that rising 100-bar moving average. It has to go below that level to increase the bearish bias in the dollar versus yen. Be aware, be prepared. By the way, that moving average is moving to the upside, so it will change after every 5-minute bar. The sterling versus U.S. dollar, this currency pair is also moving to the downside, breaking away from the 100-bar moving average on the 4-hour chart, also breaking below the 50% retracement. That's of this move down from the April high to the April low. Both those levels breaking increase the bearish bias, and we've now broken below the 38.2% retracement, which held support in trading yesterday. So the sellers are trying to make a play. But as you can see, there are two other technical levels in play. These blue and green line, they represent the 100 and 200-hour moving averages between 124.36 and 124.42. We need to get below each of those levels to further increase the bearish bias on this pair. Right now, the sellers are making a play below the 38.2. We'll see if they can keep that momentum going to the downside. The dollar versus Swiss franc, this currency pair is continuing its move back, or has increased its move to the upside here. That move has taken the price away from the 100 and 200-hour moving average. That's the blue and green lines in this chart, increasing the bullish bias here. Now, what we do know, however, is that there has been a ceiling in place for this currency pair, which has limited the upside to 0.9146 up to 0.9158 1.56. There are a couple times this week where the price made new highs and could only make new highs by a couple pips. So we're moving back up toward that area right through here. And we need to get and stay above the 0.915558 level. Not just go a few pips above that level and then come back down, but get above that level and run away from that level. In other words, break out for the dollar versus Swiss to increase the bullish bias. What we do like about this chart is that the 100 bar moving average on the 4-hour chart held support here earlier this week. The 100 bar moving average on the 4-hour chart, or on the hourly chart, I should say, held support right here. No, this is the 4-hour chart. This is 100 bar moving average of 4-hour charts, an overlay on the hourly chart right here. But both the tests of that moving average line in trading both today and on Tuesday held support and pushed the price to the upside, so it increases the bullish bias for this currency pair. Finally, I'm going to take a look at the dollar versus Canada, and if I look at that currency pair on the hourly chart, what you could see on this chart, once I get it up here, is that the price is moving above some key moving averages here, or trying to move above those levels. These moving averages represent the 100 bar moving average on the 4-hour chart. That's this upward sloping line, and that's a downward sloping trend line. Our moving average line represents the 100-hour moving average. So both of those levels are being broken near the 136.82 to 85 level. If the price can remain above those levels, the bias remains more to the upside in the dollar versus Canada. So there you have it. A look at some of the major currency pairs. The dollar is getting stronger. What has it done to the technicals? I just told you. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.